Debits and credits are a fundamental accounting concept that is often quite difficult to understand for new accounting students. In part one, which I linked above, I covered the 5-step process that accountants go through in determining what accounts to debit and what accounts to credit. In part two, I reviewed additional accounting transactions and we determined the correct debit and credit for each. I recommend that you watch those videos first before watching this video, where we'll continue to practice the concepts of debits and credits with additional examples. Just as a reminder, these are the accounting transactions we've covered so far. These transactions include owner investment, a purchase for cash, a purchase on credit, and paying off a debt. Let's look at the next accounting transactions. In this next transaction, the business sells services to a customer for cash for $1,000. So step one, let's determine if this is a business transaction we need to record. What happened? The business generated revenue for cash. Is it related to the business? Yes. Can you value the transaction? Meaning, is there a dollar amount? Yes. The dollar value is $1,000. Do you have support for the transaction? Yes. The business invoices the customer, meaning there's an invoice as support. And the bank statement now shows a $1,000 deposit. Based on this information, we can tell that this is a business transaction that we need to record. In step two, we now determine what accounts increased and or decreased. What do you think? What accounts increased and or decreased? Yes, the business delivered services, so the fees income account increased. And cash increased as well. So in step three, we determine what type of accounts are impacted by the transaction. What type of account is fees income? What type of account is cash? Fees income is a revenue account and cash is an asset account. So revenue is impacted and assets are impacted. Now let's use the dealer mnemonic to identify whether we need to debit or credit. First up is fees income, which we classified as revenue. And the revenue increased. So our mnemonic tells us that these type of transactions increase with credits. So we need to credit revenue. What about the second part of our transaction? The cash account increased. And we determined that the cash account is an asset account. And do you recall how asset accounts increase? Yes. Asset accounts increase with debits. So we need to debit the account. So debit cash. And there you have it, debit cash and credit fees income. Are you ready for step 5 to record the entry? We debit the cash account for $1,000 and we credit revenue for $1,000. We can double check our work. Did we debit and credit an account? Yes. Do the total debits equal the total credits? Yes. Does the fundamental accounting equation still hold true? Cash is an asset and it increased by $1,000. So a plus 1,000 to the asset side or left side of the equation. Revenue increased and revenue increased the owner's stake in the business. Do you recall that we said that the profits and investments are amounts that the business owes to its owners or owners? So revenue is part of the money the business generates for the benefit of the owner. Where in the accounting liability do we find amounts owed to the owner? That's right, in the owner's equity section of the accounting equation. Therefore, the owner's equity increased when the business's revenue increased. And you can tell that both sides of the equation increased when the business generates revenue for cash. And we'll add another transaction to our list of accounting transactions. In this next transaction, the business sells services to a customer on credit for $3,500. Step 1, is this a business transaction we need to record? What happened? The business generated revenue by extending credit to a customer. Is it related to the business? Yes. Can you value the transaction, meaning is there a dollar amount? Yes, the dollar value is $3,500. Do you have support for the transaction? Yes. The business invoices the customer, meaning there is an invoice as support. Based on this information, we can tell that this is a business transaction that we need to record. In step 2, we now determine what accounts increased or decreased. What do you think? What accounts increased or decreased? The business now holds a promise from the customer to pay this invoice. In accounting, this type of a customer promise is called an accounts receivable, because these are accounts that the business will receive money for in the future. In exchange for this promise to pay later, the business delivered services, so fees income accounts increased as well. So the accounts receivable increased and the fees income increased. And in step 3, we determine what type of accounts are impacted by the transaction. What type of account is accounts receivable? What type of account is fees income? Accounts receivable is an asset account, and fees income is a revenue account. So revenue is impacted and assets are impacted. Now let's use our dealer mnemonic to identify whether we need to debit or credit. The accounts receivable account increased, and we determined that the accounts receivable account is an asset. And do you recall how asset accounts increase? Yes, asset accounts increase with debits. So we need to debit the accounts receivable. What about the second part of our transaction? Fees income is classified as revenue, and the revenue increased. So our mnemonic tells us that these type of accounts increase with credits. So we need to credit revenue. And there you have it. Debit accounts receivable and credit fees income. Are you ready for step 5 to record the entry? We debit the accounts receivable account for $3,500 and we credit fees income for $3,500. And we can double check our work. Did we debit and credit an account? Yes. Do the total debits equal the total credits? Yes. Does the fundamental accounting equation still hold true? Does it balance? Accounts receivable is an asset and it increased by $3,500. So plus $3,500 to the asset or left side of the equation. Revenue increased and revenue increases the owner's stake in the business. Where in the accounting liability do we find amounts owed to the owner? Yes, in the owner's equity section of the accounting equation. Therefore, the owner's equity increased by $3,500 on the right side of the accounting equation. So both sides of the accounting equation increased and the equation still balances. Let's add this transaction to our list of accounting transactions. And believe it or not, we only have 2 more transactions to cover, and you will have learned all of the basic accounting transactions that repeat over and over again. Are there other types of transactions? Sure. There are also prepaid, accrued, adjusting, correcting, and closing entries. But the type of entries we're covering here cover perhaps 70% of all accounting transactions. Are they as basic as we're talking about here, one debit and one credit? No. They will likely be many more lines, maybe even hundreds and even thousands of lines. But the concept is the same. So let's go on with talking about the last 2 entries. In this next transaction, the customer A pays cash of $3,500 to settle the accounts receivable. So step one, is this a business transaction we need to record? What happened? The business receives cash from a customer to settle an outstanding receivable. The customer promised to pay later. Is it related to the business? Yes. Can you value the transaction? Meaning, is there a dollar amount? Yes, the dollar value is $3,500. You have support for the transaction. Yes, the business invoiced the customer, meaning there's an invoice as support, and the bank statement shows a deposit of $3,500 from the customer. Based on this information, we can tell that this is a business transaction that we need to record. In step two, we now determine what accounts increased and or decreased. What do you think? What accounts increased and or decreased? The cash account increased because the business received cash from the customer. And the accounts receivable decreased because the customer no longer owes money to the business. In step three, we determine what type of accounts are impacted by the transaction. What type of account is accounts receivable? What type of account is cash? Cash is an asset and accounts receivable is an asset as well. Now let's use the dealer mnemonic to identify whether we need to debit or credit. First up is cash, which is an asset. Asset accounts increase with debits and our cash increased. So we debit the cash account. What about accounts receivable? The accounts receivable account is an asset account, and asset accounts are debited when they increase. But we want to decrease our accounts receivable. So our mnemonic tells us that these type of accounts decrease with credits. So we need to credit accounts receivable. And there you have it. Debit cash and credit accounts receivable. Are you ready for step 5 to record the entry? We debit the cash account for $3,500 and we credit accounts receivable for $3,500. And we can double check our work. Did we debit and credit an account? Yes. Do the total debits equal the total credits? Yes. Does the fundamental accounting equation still hold true in balance? Cash is an asset and it increased by $3,500. So plus $3,500 to the asset or left side of the equation. Accounts receivable decreased, and so the asset side decreased by $3,500. So the asset side of the accounting equation increased by $3,500, but also decreased by $3,500, and the equation still balances. Let's add this transaction to our list of accounting transactions as well. In this next transaction, the business pays for advertising expenses for the month for $1,875. So step 1, is this a business transaction we need to record? What happened? The business pays for expenses for the same month. Is it related to the business? Yes. Can you value the transaction? Meaning, is there a dollar amount? Yes, the dollar value is $1,875. Do you have support for the transaction? Yes. The advertising agency invoiced the business and the business has the check stub or wire transfer to show the payment. Based on this information, we can tell that this is a business transaction that we need to record. In step 2, we now determine what accounts increased or decreased. What do you think? What accounts increased or decreased? Yes, advertising expenses increased and the cash decreased. In step 3, we determine what type of accounts are impacted by the transaction. What type of account is advertising expenses? What type of account is cash? Advertising expense is an expense account and cash is an asset account. So expenses are impacted and assets are impacted. Now let's use the dealer mnemonic to identify whether we need to debit or credit. First up is advertising expenses, which we classified as expenses. Our mnemonic dealer tells us that these type of accounts increase with debits. So we need to debit advertising expenses. What about the second part of our transaction? The cash account decreased, and we determined that the cash account is an asset account. And do you recall how asset accounts increase? Yes, asset accounts increase with debits. But in this case, we want to decrease the cash. So we need to credit the account. So debit advertising expense and credit to cash. On to step 5 to record the entry. We debit the advertising expense account for $1,875 and we credit cash for $1,875. And we can double check our work. Do we debit and credit an account? Yes. Do the total debits equal the total credits? Yes. Does the fundamental accounting equation still hold true? Advertising expense is an expense, and it increased by $1,875. Expenses are similar to revenue. Remember when we discussed that the investments and profits belong to the owner. Profits are calculated by subtracting expenses from the revenue, and these profits increase the owner's equity. So minus 1,875 to the right side of the equation, specifically owner's equity. Cash decreased the asset side of the accounting equation, and you can tell that both sides of the equation decreased by $1,875. Let's add this last entry to our accounting transactions. After adding this last transaction, we have a list of 8 basic accounting transactions. I hope these 3 videos about debits and credits have helped you learn this concept. Want to continue practicing variations of these journal entries to gain confidence that you can record debits and credits? Look for part 4 of Learning Debits and Credits.